Hello students, welcome to Accounting Explained at AccountWise Academy. This is Latha Venkateswaran. Bank reconciliation statement or a BRS statement is prepared to reconcile cash book with the passbook. Cash book is prepared by the business while the passbook is prepared by the bank. Business opens a bank account with the bank and that bank account is maintained by the bank and that can be seen in the passbook or the bank statement. Okay, cash book is of many types like single column, double column, etc. In the double column cash book and triple column cash book, we open cash column and the bank column. So see here purpose of a cash book. The cash book records all cash and bank transactions serving as both cash account and bank account. So in the double column cash book we maintain cash column and the bank column, and in that we have the cash account and the bank account which shows the balances at the end of the period. For example, end of the month or end of the financial year. See, I have uploaded videos on cash book. I'll be sharing in the description box the link of it. You can go through it for a better understanding. Okay. Now coming to the lesson, role of the passbook. A passbook or bank statement is a copy of the bank account as per the bank's records. It is a copy of the bank account. Bank account is the business's bank account as maintained by the bank. Okay, as per the bank's records, showing deposits in the credit column and withdrawals in the debit column, helping customers track their funds and update their records. So customers here is the business can track the funds where it goes from the bank, and they can update their records, means they can update the books of accounts. I am going to explain to you now how cash book and passbook are maintained or prepared. Okay, cash book, passbook, bank statement all are same. Okay, in the cash book all the receipts are written on the debit side. In the passbook all the receipts are written on the credit side. Basically cash book and passbook. Okay, passbook is the mirror image of cash book, that's all, mirror image, or everything is ulta in the passbook when compared to the cash book. Now payments is written on the credit side in the cash book. Now you tell me where the payments will be written in the passbook. Yes, payments will be written on the debit side. Okay, when the cash book has a positive balance, it will be on the debit side. Okay, similarly when the passbook has a positive balance, opening or the closing balance, whatever it is, then it will be on the credit side. Similarly, when the cash book has a negative balance, it will be on the credit side. Negative balance, what is the other name for the negative balance? Overdraft. Overdraft is the amount we withdraw over and above our accounts. Usually individuals will maintain savings account, whereas business will have current account. The advantage of maintaining current account is this: they can have overdraft facility. That is, they can withdraw over and above their balance. Suppose their balance is ₹1000, they can withdraw even ₹2000 from their account. Then the balance becomes ₹1000 is plus, minus 2000 becomes minus 1000. That is credit balance as per cash book, whereas in the passbook it will be debit balance of 1000. So overdraft will be written on the debit side. Negative balance will be written on the debit side of the passbook. Okay. This is a major difference between cash book and the passbook. You have to remember this then only you will be able to solve the BRS, or you will be able to reconcile the cash book and the passbook properly. Let's see when a bank reconciliation statement has to be prepared. After balancing the cash book, that is end of the month or end of the year, it is essential to compare it with the bank statement or passbook. Compare the cash book with the bank statement or the passbook to ensure accuracy of it, and if there is any differences, then identify the discrepancies. Causes of differences. Differences between the cash book and the bank statement can arise due to timing gaps in recording transactions such as outstanding checks or deposits in transit. Suppose you have issued a check on 28th January 2025 and to a supplier. Okay, and the supplier deposits in the bank only on 1st February 2025 and the bank records it on 2nd February 2025. We would have recorded in our cash book on 28th January itself, but bank will record it on the 2nd February only. If you have closed your cash book and found out the balance on 31st January 2025, then our cash book would have been reduced by that particular amount for the check we have issued, whereas the passbook will have a increased balance to that extent. See, because of this, there is discrepancy. Similarly, discrepancy may arise due to deposits also. Okay, learning objectives. Understand the need for a bank reconciliation statement. Now we know what is the need for preparing the bank reconciliation statement. Identify the cause of discrepancies. Like this, we have to identify the cause. It is deposited on 28th, but the bank has recorded it on 2nd February. Prepare the statement. After identifying the discrepancies, we have to prepare the BRS. Then we have to find out the correct bank balance as per the cash book. This is very important. We have to find out the correct bank balance as per the cash book. This BRS is very important before we prepare any financial statement like trial balance, trading and profit and loss account, and balance sheet. First, this BRS has to be prepared, then only the financial statements can be prepared. This is the format of a passbook. Here bank name will be provided and the date of issue, that is on 30th September 2016. Name of the account holder is Dev Pandit, and all the account holders, whoever opens accounts with the bank, will be given a unique account number. That is what is provided here, and the address of the account holder. The columns in the passbook are date, particulars, check number, debit, credit, balance, and remarks. See here opening balance is 5782. It is a normal balance. Then we can say it has a credit balance because all the debits are withdrawals and all the credits are receipts in the passbook. So all the debits will decrease the balance of the customer and all the credits will increase the balance of the customer. This is for a normal positive balance. Suppose if the customer has a negative balance, that is a OD, then it will be ulta. Withdrawals will increase the balance, whereas deposits will decrease the balance. Okay. Need for reconciliation. When comparing the bank balance in a firm's cash book with the bank statement, the two balances often differ. We saw one case now when the check was issued to the supplier deposited the check after only 3 days and the bank recorded it the next day. So these are all the reasons for which the two balances may differ. Require identification of the causes of these differences to reconcile them through a bank reconciliation statement. This can be reconciled, the differences which we just saw in the example which we took, can be reconciled only with the help of the bank reconciliation statement. To prepare a bank reconciliation statement, both the cash balance and the bank statement as of a specific date are needed. If you close your cash book on 31st January, then we need bank statement as on 31st January only to prepare the statement. So it should be closed on the or prepared on the same date along with detailed records for them from them to identify discrepancies. Detailed records means cash book, full cash book we should have. Similarly, passbook which we now saw the example, no, similar to that we should have the bank statement. The differences are resolved by comparing entries in both the books. So each and every entry will be compared, pinpointing the specific items and the amounts causing the mismatch. If there is any mismatch, then that specific item will be pinpointed or highlighted and reflecting them in the BRS to align the two balances. That differences, after highlighting it, it should be reflecting in the bank reconciliation statement so that the two balances are tallied or we get the bank balance as per the cash book correctly. Let us see now the format of the BRS. BRS can be done in two formats, single column and double column. Single column is one, you are going to maintain one column for both the additions and the subtractions. Mostly that is not used, we use only double column BRS. There were two amount columns are there, one showing additions, that is a plus column. See here, additions plus column, and another showing deductions minus column. For convenience, we usually adopt this treatment. Mostly we will use only this treatment. So the format is like this: particulars, amount plus amount minus, and we are going to start from balance as per cash book. We are going to add back checks issued but not presented in the amount plus column, interest credited by the bank in the additions column. Next, checks deposited but not credited by the bank in the deductions column, bank charges not recorded in the cash book in the deductions column, and finally we end up finding the balance as per the passbook as given by the bank or as given in the bank statement. Okay, I am going to explain this with an example. Let's see how to do it. Let us assume the cash book balance of some business as on 31st January 24 is 10,000 rupees and the passbook balance as on the same date 31st January 2024 is rupees 9,400. This passbook balance will be provided by the bank. Okay. Now we are going to start with the cash book balance and derive at 9,400. We are going to make adjustments for the entries which are not passed in the cash book and in the passbook. Okay. So first let's see this BRS, balance as per cash book. What is the balance as per cash book? 10,000. So we are going to take 10,000 as the balance as per cash book under additions column. Okay. Next, checks issued but not presented. For this, let us take two columns. One is for cash book and another is for passbook. Okay, let us assume the checks issued but not presented amount is rupees 1,000. Okay, when the checks are issued in the cash book, we immediately pass the entry. That amount will be reduced in the cash book immediately. We would have already done it. But in the passbook, it was not presented, means there is no entry for that in the passbook. The person to whom we have issued the check has not presented or has not deposited the check in the bank for their payment. So there is no entry. Now we are going from cash book to passbook. In order to get the passbook balance, we must add back this 1,000. Then only we will be able to get this 9,400 balance. So checks issued but not presented, against that under additions column we have to write 1,000 rupees. Okay, what is the next item in the BRS? interest credited by the bank. The bank has credited the interest, but it has not been entered in the cash book. I have already told you that favorable balance in the cash book means debit. Wait, I'll change the color. Favorable balance in the cash book is debit, and in the passbook it will be credit. All the deposits will be added or debited in the cash book, whereas all the deposits or income will be credited in the passbook. This I have already told, cash book and passbook are like mirror image. When you do debit here in the cash book, that will be credit in the passbook. Here in the BRS, we will take this balance as per cash book as DR, that is the favorable balance. Okay, now interest credited by the bank means the amount we are maintaining in our savings account, no, for that interest will be given by the bank. That amount will be known only to the bank, and we will come to know about it only after seeing the passbook. So for that, no entry has been passed in the cash book, but in the passbook there has been an addition. Let us assume that amount as rupees 500. Now we are coming from cash book, we are starting from the cash book, and we are going to find out the passbook balance. So if we want to get the passbook balance, we have to add back this 500, then only we will get the passbook balance of 9,400. Okay, so this 500 should be added. Interest credited by the bank 500 should be put under the additions column. Okay, now all the additions are over. When you add 10,000 plus 1,000 plus 500, it comes to 11,500. We will write it here. What is the next item? Checks deposited but not credited by the bank. When the checks are deposited, it would have been entered in the cash book immediately, but in the passbook we will do the entry only when the checks are presented to the bank. Okay, suppose the amount is rupees 2,000. We would have already added 2,000. Deposit means it will increase the balance, no? So we would have already increased 2,000 in our cash book, but in the passbook no entry is passed. See here, not credited by the bank. Checks deposited but not credited by the bank. So no entry is passed. This 2,000 is already added in the cash book. Now we are going from cash book to passbook. Only when we reduce this 2,000 amount, we will get the balance of 9,400 in the passbook. So we have to write 2,000 under the deductions column against checks deposited but not credited by the bank. Okay, the next item in the BRS is, see, bank charges not recorded in the cash book. For the account maintained by the bank will charge us a meager amount. Those are called as bank charges. That bank charges we will come to know only after we see the passbook. Okay, so bank charges, suppose the amount is rupees 100, that is entered in the passbook, but no entry is passed in the cash book. So this is a deduction in the passbook, but no such entry is entered and passed in the cash book. We are going from cash book to passbook. Only when we deduct this 100 rupees, we will get the balance of 9,400. So under deductions column, against bank charges not recorded in the cash book, we have to write 100. Okay, now when we add the deductions column, 2,000 plus 100, you get 2,100. Okay, when you deduct 11,500 from 2,100, you get 9,400 as the balance as per passbook. It is credit. Okay, because cash book and passbook are like mirror image. When the cash book has a debit balance, passbook will have a credit balance. Now we have got 9,400. That is what the balance given by the bank also. So now our BRS is correct and we have entered all the missed out entries both in the cash book and the passbook, and we have finished the reconciliation. This is how we have to do the reconciliation. Okay. Need for reconciliation. The differences between the cash book and the bank passbook is caused by, first is timing differences on recording of the transactions. Next, errors made by the business or by the bank. We are going to see these two elaborately now. Timing differences on recording of the transaction. This is what we are going to see first. First point for that is checks issued but not presented. When a firm issues checks, they are recorded in the cash book immediately. As soon as we issue a check, that will be recorded in the cash book, but the bank only deducts the amount when the check is presented. Bank will come to know about the issuance of check only after the check is presented to it for the payment. This delay creates difference between the cash book and the passbook balances. Next is checks deposited but not cleared. When a firm deposits checks from customers, it records them in the cash book. When we receive a check from the customer, immediately we are going to write it in the cash book. But the bank only credits the amount once the check is cleared. The bank will credit the amount after the deposit of the check. The check has to be cleared first. Then only it will make the entry in the passbook. This delay will be more for outstation checks, and this causes a mismatch between the cash book and the passbook also. Mainly for outstation checks, mismatch will be there. For the local checks, the slight delay for 1 day will be there. But for outstation checks, more than 2 days definitely will be there for the cash book entry to be passed in the passbook. Next reason for timing differences is direct debits by the banks. Banks sometimes deduct charges like check collection fees, overdraft interest, bank charges we saw in the BRS format. No, that one without the firm's immediate knowledge. Firm will not know about it. Okay, these deductions are reflected in the passbook but not in the cash book until the statement is received. So we will not be knowing about the deduction in the passbook until we receive the statement, bank statement, or we see the passbook. Direct debit deposits by customers. If customer deposit money directly into the firm's bank account, the bank records it immediately. If some of your customers, instead of issuing a check, they may go directly to your bank and they may deposit money. Nowadays they do funds transfer. No, if they do funds transfer, it will be immediately reflected in the bank account, but the firm only updates its cash book after receiving the bank statement or seeing the passbook. This may lead to a difference also. Next cause for timing differences: interest and dividends collected by the bank. When the bank collects interest or dividends on behalf of the firm directly, it credits the amount immediately. However, the firm records it only after receiving the bank statement, causing a temporary mismatch. So whatever the items the bank receives directly, deposits, okay, we will be knowing about it, that is the business will be knowing about it only when it receives the bank statement. Till that time, business will not know about it. Direct payments by the bank. If the bank makes regular payment, example rent, taxes, etc. So we would have asked the bank to make the regular payments on our behalf, okay, on behalf of the firm as per standing instructions. By giving a standing instruction, we can ask the bank to make some repetitive payments like rent, taxes, etc. That is what given as examples. No, it debits the amount immediately. The firm updates its cash book only after receiving the statement, leading to a difference. Next, one important point, see here, dishonored checks or bills. If the check does not get honored, then we say it is dishonored. For deposited check or discounted bill, bills means bill of exchange, that is bills receivable or bills payable, is dishonored, the bank debits the firm's amount immediately because the bank will be knowing it in the first hand. Since the firm is unaware until the statement arrives, firm will not be knowing it until it receives the statement. the cash book balance remains higher than the passbook balance because of the dishonor of the check recorded by the bank but not recorded in the cash book of the business. Next is errors committed in recording transaction by the firm. Till now we saw by the bank timing differences. Okay, timing differences in recording. Now we will see the errors. Sometimes the difference between the cash book and the bank statement balances is due to errors made by the bank or the business. These errors lead to mismatches between the two balances. Errors by the firm. Mistakes in recording transactions such as omitting entries. Some entries may be totally omitted or incorrectly recording checks issued or deposited. As I told you, instead of 150 they would have recorded 510, or instead of 510 they would have recorded 150, like that. Or errors in totaling. While totaling also they can make errors, can cause discrepancies between the cash book and the passbook balances. Errors by the banks. The bank may also make mistakes such as omitting transactions, totally omitted some transaction, incorrectly recording check deposited, or errors in totaling. Okay, these errors result in differences between the passbook and the cash book balances. We are going to see now different scenarios under which question can be asked in your exam. First one is when debit balance, that is a favorable balance, or the positive balance as per cash book is given. So they will give the positive balance of the cash book and they will ask you to ascertain the passbook balance. Next, when the credit balance or the favorable balance as per passbook is given. Next, they will give a favorable balance or the credit balance or the positive balance as per passbook, and then you have to find out the cash book balance. Next scenario is when credit balance as per cash book, that is unfavorable balance or overdraft balance or negative balance is given, then you have to find out the passbook balance. Next scenario is when debit balance as per passbook, that is unfavorable balance or overdraft balance or negative balance as per passbook is given, and you have to find out the cash book balance. So these are all the different situations under which you have to prepare the BRS. If you would like to inquire about the online classes which I take or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.